Have you ever actually stopped to look, really look at that little black plastic thing plugged into the back of your TV?
Or maybe it's just built right into the TV itself now.
Right. And we use this thing every single day. We scroll through it. We yell at it when the Wi-Fi cuts out. But have you ever really stopped and asked, how does this thing actually make money?
It seems like such a simple question, right?
Yeah.
But it's not. On the surface, it looks like a terrible business.
Totally. You buy a screaming stick for, what, 30 bucks? Maybe 50?
Mm-hmm.
And then you're done for 5-6 years.
That one-time sale, it just shouldn't be enough to power a massive company.
Exactly. It's not like a toaster. I buy a toaster, the transaction is over.
Right.
But the TV, it feels like this black box.
Yeah.
Literally and figuratively.
It's the ultimate Trojan horse. You let the hardware in your house because it's cheap, it's easy, it organizes all the chaos of your apps.
Mm.
But the real business, the real machinery, that doesn't even start until you turn it on.
And that machinery is exactly what we are taking apart today. It's Friday, February 13th, 2026.
Yeah.
Yesterday afternoon, Roku dropped their Q4 2025 earnings report.
And the market reacted.
Oh, it reacted. The stock jumped, what, over 8% in after-hours trading? But we're not here to talk about stock prices.
No, this isn't about that. This report is basically a blueprint for the future of your living room.
A blueprint.
I'd call it a survival guide for the streaming age. If you read through the report and the conference call, which I did, you see three huge things happening. First, a financial turnaround that is just shockingly disciplined.
Oh, wait.
Second, a really heavy practical bet on AI that changes how ads are made. And third, a brutal distribution war for control of the actual screen itself.
So it sounds like Roku is trying to go from being that scrappy little startup to, I don't know, a giant media gatekeeper.
That is exactly the play. They want to be the operating system of the living room. And their whole argument is whoever controls that OS
Controls what you see.
controls reality. Yeah.
Okay, let's unpack this. I want to start with the money, because that's the headline. For so long, the story with Roku was just growth, growth, growth.
Right. Burn cash, get users, figure out the money later, the Silicon Valley playbook.
And that playbook seems to be over. The headline number was, what, $1.39 billion in revenue?
Yeah, which beat expectations. But to really get what's happening, you have to look deeper than just that top number.
I noticed in the report they split it into two buckets: devices and platform.
Which is the crucial distinction. Devices, that's the hardware. The sticks, the sound bars, they basically sell those at cost, sometimes even a loss.
So they're paying you to put their software in your house.
Pretty much. Because the platform revenue, that's the ads, the subscription cuts, all the software stuff, that side grew 18%. That's the engine.
So lose money on the plastic, make money on the eyeballs.
Exactly. But the number that really made Wall Street cheer was the profitability. I saw the term EBITDA, break even, a lot.
Okay, for those of us who aren't finance majors, what does that actually mean? They're not just like lighting piles of money on fire anymore.
Essentially, yes, that's a great way to put it. They hit that break-even point way back in 2024, a full year ahead of schedule.
Wow.
But in 2025, they didn't just break even, they started printing cash. They posted a record free cash flow of $484 million for the year.
Almost $500 million in cash.
Yeah.
That's a serious war chest for a company that used to be deep in the red.
It completely changes the psychology of the company. You can go on offense.
Yeah.
And their CFO, Dan Jetta, he laid out this goal that I think surprised a lot of people.
What was it?
He sees a path to over $1 billion in free cash flow by 2028.
$1 billion a year.
$1 billion a year. It puts them in a totally different weight class.
So they're lean, they're profitable, but that brings us to the big buzzword, doesn't it? The one we can't escape. AI. And I have to be the skeptic here. I feel like every company just sprinkles AI on their earnings report now to make it sound better. Is Roku actually using it for anything? Or is this just for the investors?
It's a fair question, and usually I'd agree. But reading what the CEO, Anthony Wood, laid out, they have three very specific, very practical applications. These aren't just vague promises.
Okay, so walk me through them. What's number one?
The first is discovery. You know that feeling, Netflix paralysis?
Oh, I know it well.
Yeah.
You sit down, you open an app, and you just scroll and scroll. And 20 minutes later, your food is cold.
And you just end up rewatching a show you've already seen.
Yes. every time.
So they're using AI to fix that. They're generating these things they call why to watch summaries. So instead of the generic studio description.
Like a man goes on a journey.
Exactly. The AI looks at the show and it looks at your viewing history and it might say, watch this if you like dry humor and Jason Bateman.
So it's personalized. It's like having a friend on the couch who knows your taste.
And because Roku sits on top of all the other apps, it can do that for everything, not just one service.
That's actually really useful. Okay, what's the second one?
Voice. They've updated Roku Voice so it's actually conversational now. You know how clunky TV voice commands have always been?
Ugh, yeah. I stopped using them years ago. It was faster just to use the remote.
Well, they're betting they can bring you back. Now you can ask it a complex question like, show me movies from the 90s that won an Oscar but aren't too depressing.
Not too depressing. That's a very specific filter.
It is, and a normal search fails that test, but a language model can do that. You're having a dialogue with your TV to find something to watch.
Okay, I can see that. But you said there was the third one that changes the economics of the business. That sounds bigger.
It is. This is the one with the biggest long-term impact. Anthony Wood called it content economics. His prediction is that AI is going to massively reduce the cost of producing long-form video.
So AI-generated shows or just tools?
Both. Think about visual effects, editing, even script help. Stuff that took a huge team weeks to do can now be done by a couple people in an afternoon. And his logic is simple. If content gets cheaper to make,
there will be more of it.
there will be way more of it.
But do we really need more content? I can't keep up as it is.
We don't need more generic stuff, but the bet is that cheaper production means you can make super niche content, like a show about, I don't know, underwater basket weaving in the 1920s.
Right. That show doesn't exist now because the audience is too small.
But if AI drops the production cost by 90%, suddenly that show makes sense. And more content for every little niche leads to more engagement, more hours watched.
Which means more ads to show.
Precisely. And speaking of ads, this is where the whole business model is getting a massive overhaul. We have to talk about their ads manager.
Right. Traditionally, TV ads have been for the big guys, right? Ford, Coke, that level.
Exactly. You needed a creative agency, a six-figure budget for the commercial itself, and then millions to actually buy the airtime. The barrier to entry was huge.
So your local pizza shop just sticks to Facebook ads.
They stick to where the self-serve tools are. But Roku looks at that market, the small and medium business market, and sees a $600 billion prize. They want that pizza money.
How do they get it?
They've built a self-serve platform. A small business owner can log in, set a budget for, say, $500, target people in their zip code, and buy actual TV ad space.
But wait, it's not just buying the ad slot. You have to make the ad. That's the hard part.
And that's where the AI comes back in. They're integrating generative AI tools. So you can basically type in your business name, upload a couple photos, and the AI will generate a video ad for you.
Wow. Okay, so that just removes the creative barrier almost completely.
And it shifts the whole game from just brand awareness to what they call performance marketing.
Which is just a fancy way of saying, did someone click on it?
Yep. Click to buy, scan a QR code, get a coupon. They're turning the TV into a direct response machine. And to do that, they're partnering with these big ad tech platforms, which leads to this really fascinating frenemy situation. One of their key partners is Amazon.
Whoa, hang on. Amazon, as in Amazon Fire TV stick, their biggest competitor.
The arch nemesis. They're fighting for the exact same HDMI port on the back of your TV.
So why would they do that? That's like McDonald's letting Burger King sell fries in their lobby.
It's more like the mall owner letting anyone rent a store, as long as they pay rent. Roku's strategy is to be open and interoperable. They know Amazon has incredible shopping data. Roku has the eyeballs.
So they're letting Amazon's ad tech bid on Roku's ad space.
They just want a cut of every dollar that flows through that glass screen, even if that dollar comes from a competitor. It's pragmatic.
Okay, so we have the money, we have the AI, we have the ads, but none of that works if people don't actually own a Roku. Which brings us to Walmart.
The distribution war. This is the big threat. For years, Walmart was this guaranteed source of new users. Their cheap house brand TVs, the On brand, all ran on Roku software.
And that's changing.
It's changing in a big way. Walmart is buying Vizio, so they're switching their store brand TVs to the Vizio operating system. They're basically kicking Roku out.
That sounds like a huge blow. Losing the world's biggest retailer. Are they in trouble?
It's a real challenge, for sure. But on their earnings call, you could tell Roku was very prepared for this question. They're diversifying like crazy. They launched new Pioneer TVs at Best Buy. They're expanding their own Roku-branded TVs at Target.
They're moving manufacturing to Mexico, I saw that.
Yeah, to lower costs and speed up the supply chain. But there's a technical detail here, a hardware detail, that I think is the real nugget. It explains why Roku is so hard to kill.
I love the technical nuggets. Lay it on me.
It's something Anthony Wood called the BOM advantage. BO.
Bill of materials.
Right, the shopping list for every single part you need to build a TV.
Right.
And Wood's argument is that Roku OS is the only operating system purpose-built just for television.
As opposed to, what, Google TV?
Exactly. Google TV and Android TV are basically mobile operating systems that were adapted for a big screen. They're heavy, they need a lot of processing power and a lot of memory to run smoothly.
Okay.
Roku OS is incredibly lightweight and efficient, so it can run smoothly on much cheaper, less powerful hardware.
And memory chips cost money.
A lot of money. And memory prices are rising. So if you're a TV maker like a TCL or Innocence and you're trying to build a TV for $299, every penny in that bill of materials matters.
So if you use Google software, you might have to spend $15 on a memory chip. But with Roku, you can use a $5 one.
And that $10 difference is basically your entire profit margin. That's their moat. It's a hardware advantage driven by smart software. They've engineered their way into job security.
That's fascinating. So it's not just about what consumers prefer, it's about the basic economics of manufacturing.
And the scale is just massive now. They're on track to pass 100 million streaming households this year. That's a center of gravity that's really hard to ignore.
Speaking of their content, I was reading the report and saw a couple names that made me laugh. Howdy and Frndly.
Yes! Frndly with no I or E. Very hip.
Are these real things? What is that about?
They are. They're services Roku has acquired or integrated. But don't let the weird names fool you. The strategy is simple. Bundling.
Wait, bundles? I thought we all cut the cord to get away from bundles.
And we're right back where we started. Roku knows the future isn't just selling you Netflix. It's becoming the subscription hub for everything. They want to be your new cable company.
So they handle the billing, the interface.
And they take a cut of every single subscription you buy through them. It's all about increasing that average revenue per user.
And they're taking this international, right? They mentioned Mexico.
Yeah, Mexico is doing incredibly well, scaling almost as big as the US now. The money isn't quite there yet, but the eyeballs are. Brazil is scaling fast. Canada's ad market is mature. They're planting flags everywhere.
So capture the living room now. Figure out how to monetize it fully in 2030.
That's the play. And to tie it all together, they're testing a new home screen design, one that integrates Roku City.
Oh, I love Roku City. That weird purple screensaver with all the movie references, it's so relaxing.
Well, enjoy it while it lasts, because it's about to get profitable. They're building ads and promotions directly into that experience. The screensaver is becoming a billboard.
Of course it is. Of course.
If there are eyeballs, there will be ads.
So, to wrap this all up, we've got a company that's now cash rich, using AI to make content cheaper and ads smarter, and fighting a hardware war using software.
And doing it all profitably. That's the big shift. They're not a speculative tech company anymore. They're a media giant.
So for the listener at home who just wants to watch a movie, why should they care about any of this? Why does EBITDA or the bill of materials matter to them?
Because the operating system of the living room dictates your reality. As AI curates what you see, the menu is no longer neutral. It's going to get much more personalized, sure, but it's also going to get much more commercialized. That line between the show you're watching and the ad you're about to see is going to get very, very blurry.
That's a little dystopian.
It's the trade-off. You get cheap hardware and endless content, but the price is your attention.
So here's my final question then. Thinking about the future. If the CEO is right and AI drives the cost of making a TV show down towards zero, what does that do to the quality of what we watch?
That is the question to leave everyone with. If making a show is as cheap as writing an email, and Roku's main goal is to monetize your engagement, are we entering a golden age of creativity where anyone can make a masterpiece? Or are we just about to drown in an infinite sea of good enough AI-generated shows designed for the sole purpose of keeping our eyes open long enough to sell us a pizza?
A good enough sea of content. I think I'm already swimming in it some nights.
I think we all are.
Well, on that thought, thanks for listening to this deep dive into Roku's 2026 playbook. We'll catch you on the next one.
Take care.